Assalamualaikum warahmatullahi wabarakatuh. Hi everyone. Let's dive into the world of Islamic banking. Ever wondered how Mudharabah, Murabahah, and Ijarah or Kafalah works? These aren't just terms. They are the backbone of Islamic finance. So let's break down each of these principles and see why they are beneficial for everyone. First, Mudharabah or profit sharing partnership. First up, profit-sharing partnership is imagine you have a brilliant idea, but you lack funds. The bank, as moderate or capital provider, steps in to fund your idea. When profit comes in, you both share them based on a pre-agreed ratio. But if there's a loss, only the bank bears it. Mudharabah is perfect for aspiring entrepreneur with great ideas but limited funds. Search for customers. Mudharabah provides access to the capital with share risk, while the bank benefits from potential returns without operational involvement. Second one is Murabahah, cost plus financing. Here's how it works. Let's say you need to buy equipment for your business. Then the bank buys it for you, then sells it to you at a markup price, allowing you to pay the installment. The markup is agreed upon upfront, so there's transparency, and you know exactly how much you're paying. The beneficial in Murabahah is help customers purchase necessary items without traditional loans or interest. It is clear, straightforward transaction beneficial for anyone needing assets for personal or businesses use. The third one is Ijarah or leasing. Then we explain about leasing. Instead of selling an asset, the bank leases it to you for a specific period. You pay you pay a rental fee, and at the end of the lease, you might even have the option to buy it. This is ideal for those who need access to assets but don't want to buy them outright. What beneficial for us? The Ijarah provides flexibility, allowing to use an asset without fully committing to purchasing it. This is especially useful for a business that need expensive equipment but want to minimize capital expenses. The second, the fourth is Kafalah or guarantee. Diagram lastly, in Kafalah, the bank acts as a guarantor for its customer, assuring third parties that commitments will be met. This is commonly used in international trade or large business transaction, providing peace of mind and increasing trust among business partners. With Kafalah, businesses gain credibility and security in the eyes of partners and investors, which can open up more opportunities. And there you have it. Murabah, Ijarah, and Kafalah. Four key principles that make Islamic banking unique, transparent, and fair. Each serves different needs, from funding business to answering trust in transaction. Thank you for watching. Don't forget to subscribe and let us know which Islamic finance topic you'd like to learn next? Thank you very much. Assalamualaikum warahmatullahi wabarakatuh.
Let us understand what is Islamic banking and finance. Before that, we need to have clarity on what is a bank, how a bank works. Let us start with a basic question. What do we do with money? We can either save it or spend it. If you have money and you want to save it, what is a good place? A bank. If you have no money and you want to spend it, then what is a good place to get money? A bank. So, in either of the cases, a bank plays an important role. A bank is a financial intermediary that accepts deposits and channels those deposits into lending activities. So you can see people depositing money on one side, and then on the other side there are people who are approaching the bank to seek funding. Both the activities of deposit taking and providing funds are based on interest. What it means is that a depositor would receive fixed interest on his deposits, and the fund seeker will have to pay fixed percentage of interest on the money borrowed. And the difference of these two interest rates becomes bank's profit. Now the question is, how different is an Islamic bank from an interest-based bank? Islamic law prohibits any excess or premium charged on money lent. Paying interest and charging interest both are not acceptable. Under the principles of Islamic finance, money is viewed as only a medium of exchange and a measure of value. Money is a tool to measure the value of all commodities, and it is not a commodity in itself. So the question is, how will an Islamic bank work without giving or charging interest? How will it make a profit? How will it provide return to its depositors? How will it provide financing to its customers? In a way, how will an Islamic bank work? An Islamic bank plays two roles. One as a partner, where it invests the funds of the depositors in Sharia-compliant business ventures, and provides them a return on a profit and loss-sharing basis. And the second as a trader, where the Islamic bank purchases assets, bears the risk of ownership, and then either sells or leases out the assets to the customers who require financing. Let us now understand what are the principles on which Islamic banks work. In Islamic law, which is called as Sharia, there are two primary sources, the Quran and the Sunnah. Quran is a divine book and word of Allah revealed as a final revelation and guidance to mankind, while the Sunnah refers to traditions of Prophet Muhammad, peace be upon him, that include his sayings, actions, and tacit approvals. The basic principles related to business transactions and trade can be interpreted based on the circumstances, provided such interpretation does not contradict with the Quran and the Sunnah. This unique feature or flexibility of Islam makes it relevant to every generation. Now, let us see who provides guidance to an Islamic bank on Sharia. It is a Sharia board. Sharia board is an independent body that consists of Sharia scholars. Each Islamic bank is required to appoint an independent Sharia board, which will advise them on how the Islamic banking activities be done in a Sharia-compliant manner. The Sharia board checks whether the Sharia guidelines are implemented effectively by the Islamic bank, and a regular Sharia audit is conducted to ensure this. Now, who are the customers of an Islamic bank? It can be individuals, companies, financial institutions, and governments. What are the needs of the customers which are being fulfilled by the Islamic bank? The saving needs and the spending needs.